So this is making news, and after-hours trade on the U.S. side. In fact, this ended up as being the profitable deal for the U.S. government after so much controversy during the global financial crisis. And it looks like the U.S. government help to AIG is coming to an end. The Treasury Department is unloading the last of its stake, and Mia Saini is here with a look at how much the U.S. has made. And this is what, its sixth share sale.
Yeah, and essentially you have the U.S. government just wiping their hands clean from probably one of the most controversial deals of the financial crisis. They had to step in after AIG underwrote various credit default swaps by one division that pretty much just went south. And so this is a sixth deal. The government has been slowly selling its stakes for months. The last one happened in September when it was for the first time you saw them reduce their stake below 50% since the financial crisis. But let me give you a sense of what's happening right now. This news after the closing bell. The Treasury selling some 234.3 million shares. As you can see, that's at $33.36 a piece. This amounts to about 16% of AIG right now. Now, the offering would raise some $7.8 billion, and the U.S.'s profit, well, $15.1 billion as of mid-September. Many analysts saying, I wonder where else the U.S. government could get that kind of return. So we'll still wait to see whether or not it was the most judicious move, but the offering is being handled by several big banks, Bank of America, Goldman Sachs, JP Morgan, Deutsche, and Citi, to name a few. I will mention to you, Susan, that the Treasury still holds a few of these warrants, mainly because they have the optionality to step in if so desired, to buy a little bit more of the company.
Right. Now, the total, I believe, that the U.S. government infused into AIG during the depths of the global financial crisis was almost $180 billion.
Right.
That's a round figure for you. And at one point owned more than 90% of the company. Can you believe that?
92% to be exact. And we didn't see them get to below 50% until September. And so we knew this was going to happen. The markets were just waiting for when this is going to happen. The U.S. government made it very clear, and Ben Bernanke made it very clear that he wasn't a fan of stepping in.
Now, what's next for AIG? Because they've been unloading some of their own stakes as well. Yesterday, selling off a portion of ILFC to Chinese investors, AIA here in Hong Kong, which listed. So what's next for the big insurers?
So from a strategic point of view, you have to imagine that they're probably staying clear from the derivatives business. They're scaling back, and they're going back to their bread and butter. So they're focused also on just property casualty coverage, as well as home and life insurance. Exactly, the policies, the things that you would expect an insurer to do. But take a look at this chart right here. This is a 5-year chart. We're talking almost 100% being wiped off since the government first stepped in back in, call it the end of 2007, beginning of 2008. To give you a sense of the numbers, the number of people that worked at the bank back in 2007 was almost 110,000. We're at less than half of that now. And you have to imagine the assets also climbed down as well. Back in 2007, at the end of 2007, Susan, more than $1 trillion. Now we're talking just $550 billion.
Yeah, it's still a hefty balance sheet, though, I got to say. All right, we'll see how this might even impact trade on AIA, say, here in Hong Kong. AIG is still one of the biggest shareholders in that big insurer. Okay, Mia, thank you so much for that. Mia Saini there with the latest on the U.S. Treasury selling off its last to AIG stake.